Good afternoon, traders. This is Austin coming to you from New Jersey. Really quickly, it is Sunday, July the 22nd, about 5 hours away from the Sydney Open, and I'm just going to go over the commodity side, the Australian dollar, New Zealand dollar, and Canadian dollar, and just share with you some of my possible trade setups that I'm going to be looking for going into this trading week. So I'm going to start off with the New Zealand dollar. Both I'm going to be looking at the Kiwi US dollar and the Kiwi yen pairs for this trading week. Starting off with the New Zealand dollar, American dollar pair. Right now we had this sell off on Friday, coming with the European sovereign debt crisis. The banks allowed the Spanish bailout plan seems to be on the startup. And once investors got that news, we saw a sell-off in the euro dollar pair, and we began to see a sell-off in the risk appetite, especially with the S&P 500. So with that said, it started to bring the Australian dollar and the Kiwi dollar pairs down, and we see that we've stopped right at this around the 79.80 support level, which actually I am looking at for a possible long position going into the open of the week. I got to be careful, especially playing with gaps and with the Sunday gaps. I'm not too fond of that. What I'm instead of going to look for, I'm going to either look for price to stall and wait for this 4-hour stochastic to become oversold and give me a buy signal when they cross, coming back above the 20 oversold level. So I'm just looking for a simple stochastic cross, but along with that stochastic cross, I'm also looking for a 4-hour wick testing this 79.80 level, even a little bit below if it wants to. The stronger the wick is below the 79.80, the stronger the buy signal would be that the market wants to continue up to this possible 80-50 level and above. And judging by the risk to reward ratio, I will take that long. I would also wait if it wants to drop below the 79.80 and then test this ascending trend wall right here. And what you will notice is you have this ascending trend wall along with this 80-50 level that is starting to show an ascending triangle formation. And what we're going to look for this ascending trend wall, this 80-50 level, and then we're just going to look for this ascending trend wall to just guide price until it can break this 80-50 level and expose higher prices. One thing we have to be careful of is this possible double top. Starting from Friday's sell-off and back at the end of June, early July resistance area. So this could be a possible double top, so we got to be careful with that. But me being above this the daily 50 moving average, I'm still looking for long positions. Regardless, that's how I decide if I want to look for long positions or short positions, that daily 50 moving average. So that's what I'm looking for with the for this pair. I'm going to look for the test in these two areas. The stochastic cross will give me the signal even better. It will give me the optimal entry signal, gauge my risk to reward, and enter the trade. Got to be careful of this double top, but nonetheless, we still don't know where the market is going. The market can go anywhere it wants to go, and no one knows where the market is going. Looking at the Kiwi yen pair, similar to the Kiwi dollar pair, we're on this ascending trend wall. We fell and we closed right at the support of this trend wall right at Friday's close. So we might get a gap up. If we do get a gap up, I won't be able to get into a long position, but nonetheless, I'm still looking to go long in this area, testing this trend wall right here. Strolling down to the 1 hour, I am looking for a stochastic cross. I haven't gotten it yet, so I will wait to get it. If I do get it, along with the wick testing this ascending trend wall. My stop's going to go below that wick along this area. And I'm going to look to take it right back to the top, to this 63.20 level. It's starting to produce an ascending triangle. And we are above the daily 50 moving average and above this 62.30 level. So, taking that trade, that long position based off of this possible ascending triangle formation, I'm going to look to get long along this ascending trend wall and ride it up until it can test to break this 63.20 level. I'm not going to go long when it gets more congested, obviously, but nonetheless, if I can get along with a great risk to reward ratio, I will not mind pulling that trigger at all. Simple as that. Do I know it's going to go there? Do I know my trade is going to be profitable? I do not. No one knows as soon as they pull the trigger. These are only hypothetical guesses, and they're guesses supported by price action. I'm more technical than I am fundamental, but that does not mean that I'm going to ignore what is going on fundamentally, and I do know that risk aversion may start to rear its ugly head again. So I have to be careful. Not saying that I'm not going to take any long position, but I'm just going to be cognizant that that's may be a reason why my trade might fail. It happens. Trading happens. Going on to the Aussie pair, I'm just going to look for a deeper pullback. I'm not interested in these levels right here. I don't want to try to get in long and try to chase these levels right here. I'm going to wait for a pullback to this trend line, 0300. Or if not, just wait for it to start interacting with this ascending trend line. And then we'll take it from there. I'm not really looking to go in long unless it stalls and this 4-hour 50 moving average begins to catch up. And then if I see a wick testing that 50 moving average, I might be able to get in on a stochastic cross either on the 4-hour chart or the 1-hour chart. Place my stop below a swing low and take it back up to this 0440 level or to the high of this candle right here. Take it right back up. Nonetheless, I would prefer this 0300 level for a better risk to reward ratio, and that way I'm just going to take it straight back up to this 0440 level or these highs right here. I'm going to take it right back up to that. So we see what happens. Like I said, we have this sell-off from Friday's European news, and maybe we might see a continuation of risk aversion. But nonetheless, we've had the Aussie rally for 5 days, I believe, which hasn't happened in a while. We had 5 up days. Hasn't happened in a while. So now we're seeing if this trend will follow through or if this trend will fall flat and risk aversion will start to show its face. They might begin to start to catch up to the euro, which is, I don't want to say in a nosedive, but its rallies and its attempted corrections have just failed consecutively. And we might see the Australian dollar start to suffer from that, especially the S&P 500 and risk itself. So we will see what happens. But nonetheless, I'm looking at this 0300 level or this ascending trend wall. I need to see price action interact with support before I look at any possible long positions. That's how I trade. Simple as that. That's what I'm looking at for that pair. And then the Australian yen, we have again this possible, not guaranteed, possible triangle position, ascending triangle formation. We have this ascending trend wall right here, and this 8200 level. Will it break? Who knows? But I know that I will not mind looking, not necessarily pulling the trigger. Just because it interact doesn't mean that I want to pull the trigger, but I'm going to look at it, possible long positions, if it does interact with this trend line. Not too fond of it though, but we see what happens. Got to be careful. That's my ideas for the commodity side of it. I'm not really chasing the euro, don't want to chase the euro, and that's what I'm looking at.